Did you know that crude palm oil has been shaping industries for over 5,000 years? Crude palm oil, also known as CPO, has been a versatile commodity for centuries. A key ingredient in cooking and medicine, today it's a cornerstone of the global edible oils industry. Crude palm oil futures contracts have been traded on the Bursa Malaysia Derivatives Exchange since October 1980, serving as a global price benchmark for the crude palm oil market. Crude palm oil futures, or FCPO in short, play a vital role as a risk management tool, helping industry players manage price volatility. This reinforces Malaysia's position as the leading hub for crude palm oil price discovery. Want to learn more about crude palm oil futures and how you can use structured warrants to gain exposure? Let's dive in. FCPO is a standardized contract traded on the Bursa Malaysia Derivatives Exchange, which requires a futures account. FCPO contracts allow buyers and sellers to lock in a price for crude palm oil to be traded at a future date. FCPO contracts are identified by their expiry month, and settlement for these contracts occur at noon on the 15th day or the preceding business day if it's a non-market day of the specific month. After expiry, the seller of FCPO delivers physical crude palm oil to the buyer of FCPO before the 20th day of the expiry month, whereas FCPO structured warrants are only cash settled. The FCPO's value is affected by several factors, such as price of rival edible oils, weather events or natural disasters, changes in import-export, as well as the supply-demand dynamics of crude palm oil. The FCPO contract size is 25 metric tons and its price is quoted in Ringgit Malaysia per metric ton. So, if FCPO is quoted as 4,000 Ringgit Malaysia per ton, for example, one contract would be worth 100,000 Ringgit Malaysia. As investors must meet the margin requirements in order to trade FCPO, therefore, investors require a large initial capital to trade FCPO directly. Proudly introducing structured warrants over FCPO, investors now have a financial instrument tool to gain exposure to FCPO price movements through a stock trading account without needing as large of an initial capital. The value of FCPO structured warrants is dependent on the referenced FCPO contract for structured warrants. Just like any structured warrants in the market, trading FCPO structured warrants requires only a fraction of the capital compared to trading FCPO contracts. Firstly, FCPO warrants, like all structured warrants on Bursa Malaysia, are cash settled if it's in the money upon expiry. With FCPO structured warrants, investors don't need to worry about dealing with a physical delivery of crude palm oil. On top of that, structured warrants are leveraged financial instruments equipped with an effective gearing feature. Effective gearing in structured warrants provide investors the leveraged exposure. For instance, FCPO structured warrants with an effective gearing of 5 times, the FCPO structured warrants will move by 5% for every 1% upward or downward movement in the underlying FCPO contract. Thirdly, for structured warrants, losses are capped at the initial capital invested. Investors may think of this as a built-in stop loss without worrying about losing more than what was invested. With the availability of tools such as the live matrix on the Maybank Warrants website, investors can gauge the indicative bid-ask prices at various price levels of the underlying FCPO contract. The live matrix provides transparency and simplifies risk management. Beyond that, all the specific terms of each Maybank Investment Bank issued FCPO structured warrants can be found via the warrant search function. The Maybank Warrants website offers a range of tools that make it easy for investors to conduct their own analysis, including warrant search, warrant calculator, and warrant comparison. Additionally, the website's education section provides valuable content to help you better understand structured warrants. Visit the Maybank Warrants website to learn more. With FCPO structured warrants, investors are now able to express bullishness or bearishness at a fraction of the cost.